What's going on, everybody? 360 Digital Closing Bell here. We're live on YouTube from an undisclosed location here in Denver, Colorado on this gorgeous September 3rd, 2020, a Thursday. One more day till a 3-day weekend, so you've got three more shows if you can include the podcast before we hand over the hall pass. As always, I'm your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oil and gas, Piceance.com, Stuart Turley. How you doing today?
It's a beautiful day in the neighborhood, and we got a hall pass for 3 days tomorrow.
We do. So you're one step, three more steps to make it to the hall pass. Listen to the digital ticker today. Listen to the week look back podcast this morning, which will drop around 8 a.m. Mountain Standard Time, and listen to the digital ticker, and you are on a way to a 3-day weekend. We have a great show for you lined up today. If you were shorting the market and calling for the market top a week ago, well, guess what? You got it. Brutal day for the equity markets. They're down huge. Large institutions start selling NASDAQ. Denbury's planning on emerging from bankruptcy. Here's an Ursa Piceance. We've got an interesting story on them. EPA planning on rolling back a crap load of regulations, which could be good if you're in the oil and gas business for turn two. Stu's got some stuff in the international news desk. But first, guys, just subscribe. 360 Digital Close Bell, iTunes, Spotify, YouTube. The best way to stay up to date on all of your energy markets. Speeding of the brutal beating the markets had today. Guys, large indexes fall over 3.5% to give you an idea. SPY down 3.5 percentage points. NASDAQ down 649 points. All at 5.5 percentage points as major institutions start selling tech stocks. Remember, tech stocks had really had a huge run up really since April. We've been really setting all-time highs for the past couple days. Not today, folks, as they would say. Not today. With 600 points on the downside. As I mentioned, large institutions begin really trimming their positions in tech stocks. Some of the places that would benefit from the economy reopening, Macy's was up, Walmart was up a little bit, but major tech stocks, speaking of Tesla, they were down huge. Apple fell today. Like I said, those large tech companies did not have a great day. Dow Jones down 2.7 percentage points. Decent jobs report that came out. There was only 181,000 people that filed for unemployment according to the ADP last week, which was expected to come in around 950,000. So good to see that number continue to fall. Traders and analysts, guys, what we're eyeing for tomorrow is the jobs report come out. We're expected 1.3 million new jobs created, but we will see anything lower than that. I think that's going to be a big damper. And this number specifically, as we hope, as now the full PPE has been integrated, we need to see that number pop above 1 million for the first time. So it'll be, hopefully that's a number we're looking at and really could guide. Maybe the people in the market know what's coming today. Crude oil, speaking of all the disaster in the markets, didn't have that bad of a day, stayed fairly flat, only down 19 cents, still trading at 41.32 above that $40 index. But I think these E&Ps are getting a little nervous right now, especially seeing the downside pressure that we're having. 12-month strip stayed fairly flat, though, 44.32. So the long-term outlook doesn't shift much. Natural gas stays again fairly flat, $2.48, only about 0.08 percentage points on that index. 12-month strip actually does a little bit worse, $3.19. That's about 0.75 percentage point. XOP, which are E&P securities contract, the biggest mover in the S&P 500, which is ironic to think about considering Exxon just got booted from the Dow Jones from a lot of the for basically being a lagger. 49.50, they were down 0.8 percentage points, but still were the best performing index. OIH, which are oilfield services, not quite in a breakdown of the S&P 500, it's included in energy. They were up today, Stu, 0.75 percentage point, all the way up to 124.53. Market still reacting to the Liberty Schlumberger joint venture. At Liberty now trading at $8.60. They're up 0.25 percentage point. On the downside for equities today, some really big numbers actually. Flex Energy down 7.5 percentage points. Barnwell Industries down 70 cents. That's 13.5 percentage point. And Lone Star off the back of their remittance notice yesterday. I mean, I think this is dead man tell no tales. We don't really hear anything from them until they're just another remittance. So we're looking for September 15th to figure out what's going to happen. As remember, they missed in January or in July 14th, they missed interest payments of $14 million. So we'll see what happens on that front. They're down to 31 or about 14 percentage points. And on the upside, though, big numbers. Sandridge up 6.5 percentage points, $1.82. Panhandle Oil and Gas up $1.93, up to $1.93, 14.5 percent. Whiting Petroleum, who's who's trading that. I don't know, but whoever is, it's up 21 percentage points today, $23.67. We talked with President of Entercom, Aaron Vanderford, about this, and he mentioned something that I think could be moving this is new Lynn Peterson, who's the new executive and CEO guy running Whiting. He's a deal maker. He's somebody who's interested in taking this, and you could see very quickly maybe a merger, maybe some sort of acquisition. I don't know. I'm just reading some tea leaves here, but I think that's what this number has to be, because anyone buying up Whiting right now, 25%, not good. But hey, someone needs to win today. Obviously, the overall markets took it in the short. Stu, what do we have on the international news desk today?
Hey, Michael, around the world, we've got a couple interesting ones. You remember in Yemen, I think it was 2 months ago, that they had a floating tanker sitting there that had been there for, I think, 6 years.
Yep.
And it was about to absolutely have some horrific problem. Those poor folk in Yemen with $1.2 million or million barrels would be devastated. Now, E&I asked for transference of Venezuelan oil from a repurposed tanker that's also been there for 10 years. And if you look at the picture on Oil and Gas 360, you need a tetanus shot just to even walk on board that tanker. That tanker has been,
it's COVID positive for sure. That tanker's COVID positive, no doubt.
COVID and tetanus shot. I don't know. Maybe that's the new
Hep A, B, and C.
Oh, geez. Anyway, those poor folk, they are trying to get that off. And this is systemic of a big problem around the world of all these tetanus tankers floating around the world as storage units.
Get that branded. Tetanus tankers. Let's get that branded.
Okay, cool. All right, second one. Ramco. I love following them, and they are branching out like you wouldn't believe. Last week they spent, I believe it was 1.2 billion on real estate. In the article that we've got out there today, they are looking at not building any more plants by themselves from the ground up, but they're looking at plants, gas plants in India, China, and Texas. So they are diversifying, and they're also diversifying out of oil and gas, but they're also going into downstream and real estate. And if they come up with the next Air Jordans, it would not surprise me. But I really like the way they're thinking of redoing Saudi Aramco. It'd be fun to watch.
Yeah, it will be interesting. Open invite for any of them to come on and talk about this stuff. We'd love to get you guys nailed down for an interview. A great story. I, for one, have some jet lag, so I think we're going to go ahead and land here and move back into the U.S. share. But just a couple things I want to cover. First, Ursa Piceance. This is a really small E&P company operating about 550 gas wells in the Piceance Basin. Yesterday afternoon, officially filed for Chapter 11 bankruptcy with a 363 exception. So you know what that means? It's a complete fire sale. So now we're looking for who's going to acquire the asset. I think there's a couple operators in that field. One comes to mind, Caerus Oil and Gas, that I think might be interested in this stuff. I think there's some other players up in that field, though. I definitely think there's a couple SPACs that just got formed that I think might be interested specifically in taking over these assets. So it'll be interesting to see what happens in the Ursa Piceance. Moment of silence. And that was fun. Denbury Resources talking about bankruptcy. They've planned a press release this morning that talked about emerging from bankruptcy. They're close to eliminating about $2.1 billion in bond debt. Remember, they had about 70% of their bond holders and 60% of their senior note holders agree to a bankruptcy. They plan to release that in the coming days. So Denbury plans to rise from the grave. We'll see what happens. As you guys, Denbury, their niche is CO2 flooding, Stu. And I don't know much about CO2 flooding other than the fact if you go all in on it, you go bankrupt. So not sure if that strategy is going to work going forward, but we will see. I think the biggest story of the day really right now is the Trump administration came out today, and his EPA chief came out and said they are planning in a second term to cut major regulations, which will quiet. And this is what's great. Dan Wheeler, I think is his name. Let me get this right. Andrew Wheeler, who's the Environmental Protection Agency administrator, said that they would establish a cost benefits analysis of any new regulations and expand the use of science transparency in order to justify the science behind implementing any new regulations. I mean, if you are in oil and gas, this is a dream come true. Now we're having to do a cost benefit analysis of new regulations. Generally, it's the other way around. Generally, it's a cost benefit analysis of what you're doing wrong and how do we implement a regulation. So you got to love this. Something interesting along this note came out. COO of ConocoPhillips, I don't have his name up right now, but he came out and they're really bullish on whether or not Biden or Trump wins, their permits in Alaska that are on federal land are going to continue to operate, and they're not seeing anything. So, this interview, the political scene around oil and gas is really shifting, and it's sort of funny to kind of watch it happen in real time. I think there's a lot of arguing going on, but really there's not. We've got both sides sort of agreeing that, in low cost energy, it's got to be a combination of oil and gas. Stu's been on it for a while, so we'll just give you a little golf clap. It's all coming together. I want to start a new segment before we let you guys go. Fun fact of the day. We're revamping the oil and gas, where you can view these shows every day. There's a landing page on Oil and Gas 360 where we're going to do, give you show notes. There's a link to the fun fact of the day. So you guys got to click on it. It's actually a Twitter picture, but basically what it is a screen grab from a Wood Mackenzie slide deck, which basically talks about the overall portfolio linkage to oil price and the robustness of its assets. Basically, it breaks down each majors between Exxon, Shell, Chevron, and combining Noble, BP, and Total. It takes their upstream portfolio, puts it in their NPV 10, which is what you can talk about as your market cap, under different price decks, usually 70, 50, and 30. Really, really interesting stuff. I highly encourage you to look at. Stu, you had a very interesting point. Well, what would you notice on it?
Well, I noticed that, ExxonMobil, if you take a look at it when we get it out there, is really making a lot of money on the high end, on the high price of 70, but they're losing big money at $30. And the one that I would invest in was Chevron. And Chevron was making good money at 70 and making good money at 30. That tells me there's better management. Now, Michael, Chevron's also the one that's dabbling the least in renewable energy.
Yeah, so I'd encourage you to take a look at it. Clearly Chevron becomes the second biggest player in terms of super majors with this combination with Chevron. It's very interesting that at $50 price deck, they're the best ones, which is interesting considering that's probably where we're going to be hanging out. VP makes out low cost well, high price. Exxon loves that. So it kind of gives you an idea of where those people are. Fun fact of the day. Chevron does better when they acquire Noble. And with that, guys, we're going to go on and let you get back to work. Thank you for checking out the 360 Digital Closing. Only 2 more steps to your hall pass tomorrow. We will see you guys tomorrow morning for the Week Look Back podcast and in the afternoon for the Digital Ticker.